so you see this? This line here is red, so I'm going to use red to show you that it's red. Okay, that's what happens. When GDP slowed from 3.3 to 2.4 to 2.0, that was the bottom on what? GDP growth rate, okay? It was also the bottom on what? The 10-year bond yield. It was also the top of what as a result of that? It was the top of our TLT. Remember the tizzle? Remember we were along the tizzle? I almost got it tattooed on the other side of my back because I've got a hockey one on one side. I was going to go with a little tizzle. Then I said, no, that's a cyclical thing. I don't want that tattoo. Okay, so that was the end of the bull market, the raging bull market, or it was at least the topping process of the TLT or the long bond move was the lows of, again, the growth rate and the lows of bond yields. Okay, so then what happens? You start to get an expansion. So this line is green because you got green, 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 green. Okay, with the biggest jump actually, it was kind of exciting to go from 1.2 to 2, but it was really exciting to go from 2.3 to 2.6. Okay, 2.6, and we've talked about this, is this the turtleback green, where by which this starts to go like this. Oh boy. Now if I go like this, you might say, oh my God, he's calling for a crash. I'm not calling for a crash. I was calling for reflation's rollover, and now we're starting to talk about the turtleback green. Again, does this in rate of change space in the next 3 to 6 months, 1 to 2 quarters, start to lose its momentum and slow? Yesterday we saw a slowdown in one of the epic charts this year, which is consumer confidence. It made a new high in February after the stock market hit all-time highs in January, up at 130, 130.8, and that came down to 127. Can I draw on that one? Can we go to that one? While I'm yapping, it came down to 127.7, so a 3-point drop. It's not a crash, but stuff has to stop going up at some point. You know, I guess you could color this green. You can color that little thing red, but it's really small. It was only -3 points. But what happens in 3 to 6 months, or next month for that matter, if consumer confidence goes to 124? And then what if it goes to 123? And then, you know, again, I'm not scaling this, but the reality is at some point, we're going to look back at this level, and we're going to say, wow, that was the top. There's a very high correlation between consumer confidence and the stock market. So if the stock market has topped, which is our call for now, can change. I'm allowed to change my mind every day. But we've been making this call, lower highs, and it was bearish trend. Now it's bearish trend in both the S&P and the NASDAQ. We'll look back at these charts, and they won't be making new highs. When we were bullish, they kept making new highs. All the way to February, consumer confidence did, for example. Okay, so follow the data and follow the signal. They both really matter, much more so. You notice I have not used the word Trump or tariffs yet. There's absolutely nothing to talk about this morning with that in mind. You know, we can if you want, but it's not pertinent to what we're trying to tell you this morning. And moreover, this morning, because of the GDP number being high, higher on a revision, it takes the sequential lower for the next quarter. So we're going to take our predictive tracking algorithm, takes GDP on a headline basis for Q1 to 1.55%. That is, number one, the lowest on Wall Street, and number two, it's a downward revision. It's almost down 30 basis points from where we were before that GDP report came out.